All right, what's up guys? So in this video, I just wanted to talk about finding drawn liquidity in range-based conditions when the higher time frame isn't really that clear, such as price action that looks like this, where there aren't really any fair value gaps kind of presented. We're kind of just moving sideways. We have conditions that also look like this right here, where there aren't any fair value gaps. Price is also moving sideways. So yeah, I just wanted to talk about how you can actually find targets in conditions like this, because finding drawn liquidity, there's so many videos on it, but I've seen that most of the drawn liquidity videos are kind of revolving around like when conditions are good, and I don't think anybody's really made a video on how to find drawn liquidity, like good drawn liquidities, when price action kind of looks like this. All right, so let's talk about this a little bit, but before I get in depth into this, I just want to mention that when price action does look like this, right, when like on the hourly or the 4 hour, it looks like this, or it looks like this right here, you really shouldn't be looking to trade this. All right, it's okay to sit on your hands and you don't need to take a trade every single day. That's what you should be realizing. But there's also opportunities that present themselves on the lower time frame that you might be missing, even though the higher time frame looks like this. So I just want to kind of show you not only drawn liquidity, but like maybe how to trade conditions that kind of look like this as well. So let's just kind of get into it and just make like a checklist first. So we're going to title this how to find drawn liquidity in CHOP, or in range-based conditions. All right, so the first thing you want to do, right, so range-based conditions when there's no fair value gaps presented, right? Because it's really easy to find your drawn liquidity when you have higher time frame fair value gaps. All you have to do is just set conditions, right? Like if you have let's find an example, right? You have like this hourly gap right here, right? Or if you even go to the 4 hour, you have this big 4 hour gap that's presented like right here, right? So this is kind of like an easy condition. So like if this 4 hour gets inverted, then you probably want to target lower prices. But if it gets respected, then obviously you want to target higher prices, right? And also following the trend, you see that this fair value gap should be getting respected since order flow is bullish, right? But when you have situations where price action looks like this or price action looks like this, it's kind of hard to tell where the market is going to go. So to find drawn liquidity in range-based conditions, what you have to do is first, identify session lows or session highs and lows, right? And a good indicator that I use for this is this indicator right here. A lot of people have been asking for it in comments, so I might as well show it in this video. It's called ICT kill zones and pivots. I really just have Asia and London turned on, and I don't really have anything else changed. So this is really like the two sessions that I use for my drawn liquidities, especially when you have range-based conditions like this, right? Identify session highs and lows, and then what you have to do is make sure that the lower time frame is extremely clear, okay? You have to make sure that the lower time frame is extremely clear, because on the higher time frame, obviously you can't tell where the market wants to go. So on the lower time frame, you need to see, number one, what you need to find is wait for market open and see where price displaces towards, right? So since there's no fair value gaps for you to base conditions off of, you're gonna wait for market open and see where price tends to go towards, right? And you have to see like if it's going towards session highs or if it's going towards session lows. And then after that, you can go on the lower time frames like the 15-minute or the 5-minute time frame and see if there's swing lows or swing highs presented that aren't session highs or session lows. So go to the lower time frames / mid time frames, so like the 15/5 minute, and identify swing highs / lows, okay? But first, your priority is going to be session highs and lows, and then after that, right, if price decides to kind of like break out of the higher time frame range, then you can go and mark out your, lower time frame / mid time frame draws and liquidities, which is like swing highs and swing lows, right? That's just a common thing, right? That's just common, right? So now let's actually just get into, I guess, examples. So there's like basic kind of like a trade on Wednesday that I want to go over. I didn't take this because we already took out Asia lows, but this is more of a draw on liquidity video, not more of like an entry video, right? So I just still want to go over this and kind of show you what I am talking about. This is on Wednesday, right? Okay, yeah. So let's go back. What the, all right. I don't know if you guys heard that. That actually low-key scared me. The speaker just went off. Yeah, right. So we are right before market open right now. And then if you go like on the 15-minute time frame, right, you see that price is very choppy, right? And if you go on the hourly time frame, you also see that prices, ignore this candle right here, but you see that price is very choppy. There isn't really much going on, and honestly, you don't know if price is either going to go higher or if it's going to go lower, right? We're resting in this hourly gap right here. We don't really know what's going to happen. So what you can do is go to the mid time frame and then identify your session highs and session lows, right? So you have London highs right here, and I'm pretty sure ES had a SMT with it. So I think ES took out London highs right here, and NQ didn't, if I'm not mistaken. Yeah, so right here, right, you have a SMT that's kind of like telling you, okay, we're probably going to be bearish, and then we have the swing low, which is Asia low right here, and we have to kind of see through market open. We have to wait for market open to see if our suspicion is like confirmed, right? So we're gonna wait for market open and see where price displaces towards, all right? So if we skip through the next candle right here, right, you see that price is displacing lower. And then how many points away is this candle from Asia low? Okay, well, it's like 25 points away. So you probably expect, right, due to the SMT that you have with ES, with London highs and Asia lows being a pretty good target, you can probably expect Asia lows to get taken out, right? And then now since we're displacing lower, you can also mark out this low right here and then this low right here. So these are just, common swing lows, right? Nothing too crazy. And then you have previous day low as well if we decide to break out of this entire range that we're seeing right here, right? This entire kind of mid time frame range that we're seeing. But obviously you need to see strong displacement in order for us to go take out previous day low. So the quote unquote trade that I was talking about was after we took out Asia lows right here, and then we get a retrace into this gap right here, right, into this 1 minute gap, and then we get some sort of rejection out of it, and then we get kind of like a confirming candle right here, right? We see ES is kind of pushing lower, and then you could have, I guess, targeted this. But the reason why I said this is a quote unquote trade, right, quote unquote trade, is because, my stop loss would be right here, and then this is negative RR, so I kind of have to extend it to this 1-to-1 RR, right? But nevertheless, this is still a setup, I guess, that you could have taken. But again, we took out Asia lows. There was a kind of a chance that we could have flipped and could have went higher, and ES could have taken out Asia highs, right? So there's kind of like a double SMT formed because ES did not take out Asia lows, and NQ did, and then ES took out London highs, and then NQ did not, right? So NQ could have went back and then took out London highs. So I didn't really kind of trust this setup. I didn't really see any need to put risk on over here. But if you play out the candles right, well, you actually do end up getting break even first and then price ends up delivering, right? But you do see price ends up taking out these targets right here. So yeah, that's kind of like how, it's kind of like the first example, right? Just using the lower time frame, using displacement to see where price is kind of going to go, and not really relying on the higher time frame, right? So I feel like this was somewhat clear, right? This was kind of clear that we are moving in the bearish direction just due to these two displacement candles right here, right? And then another example that I wanted to give was kind of, actually, we'll go over this example right here. There wasn't a trade, but it's kind of like a good sign to, you know, when to know when to get off, kind of, right? When to get off the charts, like when a day is not a day to trade. So if we go to Thursday, right? Thursday was absolutely brutal, right? If we go back to replay trading right here, and then go to 9 a.m., right? You see that, you know, there's literally one fair value gap that's created, and then on the 4 hour, we're literally resting inside of this 4 hour gap, and all of this right here is in a range, right? This is a whole range. So like the only target that I guess you could see bullish is all-time highs, which is right here. But in order for us to go to all-time highs, we need to break out of this range that we're currently in, right? This is your range high right here, and then this is your range low right here. So if we go to market open, you see that we actually just continue to stick into this range, and then price actually does not end up doing anything, right? We don't even take out all-time highs. And then if you look at the 5-minute time frame, once you see 20 minutes of price action, and then you see no fair value gaps kind of getting presented, right, on the 5-minute time frame, this is a really good sign to get off. We are literally just ping-ponging back and forth. And like I said earlier up above, if I can go to the 4 hour, wherever the text is. Okay, maybe I deleted the text, I don't know. But if you guys remember, I did say that you should only trade the lower time frame, or when the higher time frame is choppy and range bound conditions, you should only trade the lower time frame if it's clear, right? And then on the 5-minute right here, you see that there is nothing clear. So this is easily a day to skip. And like in the first kind of 30 minutes, you can kind of tell that price action isn't really going to be good just based off of those 3 5-minute candles, right? So price really doesn't do anything for the rest of the day, and you can kind of just like skip the day. Now, going on to Friday's price action, today's price action, there is actually some sort of structure that was formed, right? We're kind of still in a range, but we are creating fair value gaps, right? Some sort of fair value gaps, we get some sort of retracement. It's not that bad compared to this, right? This monstrosity right here. But the thing is, we are still kind of stuck in this range, right? Like we go and take out all-time highs, and then now we're back into the range. So it still kind of applies the same concept where you're kind of looking for session highs and session lows to get taken. So right here, right, we have London lows, and actually we end up forming...
Motion detected at the front door.
Bro, the speaker. Okay, yeah, we actually end up forming a SMT, I think, with London lows. So like, yeah, we have targets right here, right? We have London highs right here, and then we have Asia highs right here, which are all-time highs, right? So we have 2 targets right here, and then I guess we have this SMT that kind of confirms it. Because I don't know why it's not appearing right now. I think it's kind of closer to market open. Yeah, there we go, right? So now we have this SMT right here with London lows, and then we can kind of use that to our advantage, even though we don't really have any fair value gaps that are presented right here. You can still think that, you know, we are still bullish for the day, because we are SMTing with a session low, right? So if we go to market open, we see price actually not end up doing anything for the first like good hour or something, right? So nothing really happens. We kind of just like chop around, and then we start to actually wait for the first like 30 minutes, my bad. For the first 30 minutes, we start to like chop around. Well, I mean, like, not chop around, but like we don't really move. Or was it the first 30 minutes? 9:30 to, okay, yeah, for the first like 15 minutes, I'd say, right? We don't really end up doing much, and then we kind of move in one direction, right? So, like I said earlier again, like the higher time frame is not really looking too great, but on the lower time frame, we're kind of moving in one direction, even though price isn't moving with displacement, it's still moving in one direction, right? And then we still have this strong liquidity, which is London highs. So I did take a trade today. It did end up getting break even, but right, we get a, the same kind of continuation entry model where we get a
Motion detected at the front door.
Bro, this goddamn speak. I can't even turn this off, bro. Whatever, bro. So, right, it's the same kind of continuation model framework where, you get a move in one direction, you get a retracement into a fair value gap, which is this 3-minute in this case. And then I actually took this trade on the 30-second. Actually, let me go to my Discord and show you. So, right here in trade recaps, right, I entered off of this 30-second displacement candle because we did get a failure swing right here where we failed to sweep this low, and then we got a nice rejection higher. So I entered right here, and then I targeted London highs, but I ended up getting break even on this trade, and this was like my only trade for this entire week, right? So I ended up getting break even, $14 on the day. We were really close to hitting TP, but yeah, right? So we get a retracement, and then we get this displacement candle right here. You could have entered off of like the middle of this candle. That would not have been that bad, but right, at the end of the day, you still end up getting break even. But yeah, but like in terms of drawn liquidity, right? The drawn liquidity hit, right? You see London highs getting hit, even though the higher time frame is still kind of choppy, and the lower time frame was clear enough to kind of tell that we are moving in one direction and we're moving to London highs, right? And then if you play out a few more candles, you do see that we actually end up taking all-time highs as well, slash Asia highs, right? If you go to the 5-minute time frame, just kind of skip through. Right, you see we do end up continuing higher and then I guess breaking out of the range, right? We break out of the range finally and then we continue higher. So that's another thing that I want to add to the drawn liquidity like checklist is identifying SMTs, right? Especially at session lows or session highs, right? Because it gives you kind of like a direction of where price is going to go. Because you kind of don't have fair value gaps for that condition, right? So you kind of have to substitute it with something. So you substitute it with session highs and session lows. And again, you can use this indicator right here to kind of tell you how. Yeah, that's basically it for this video. If you guys enjoyed, if you guys learned anything from it, I don't know, like, subscribe. I don't know. Drop any questions you have in the comment section below. And if you're not already in the free Discord, go ahead and join. I'll put it in the description below. But yeah, that's basically it for this video. That's basically it for this video, guys. I just kind of wanted to make this video because I feel like not a lot of people talked about this, and I think this would be pretty useful this would have been useful for me if when I first started trading. So hopefully this is useful for you guys. But I'll catch you guys in the next video.